welcome back to the Mortgage Reports. Today we're diving into a question that comes up constantly. How do I get someone off the mortgage? Now, whether you're going through a divorce, separating from a co-borrower, or just untangling shared finances, this can get complicated fast. The process isn't as simple as crossing a name off a document, and refinancing isn't always possible or ideal. So in this video, we're going to break down what your real options are step by step, using a few real life examples along the way so it all makes sense. Question 1, can you actually remove someone from a mortgage without refinancing? Now that's a big question, and the answer is sometimes, but not always. Refinancing is the cleanest and most common way to remove a borrower because it replaces the old loan with a brand new one under a single name. But if rates have gone up or your credit isn't in great shape, refinancing might cost more than it's worth. Now, in those cases, some homeowners look for alternatives. Now, depending on the type of loan you have and your lender's policies, there are ways to remove someone from a mortgage without starting from scratch, though each method has its own requirements and limits. Question 2, what are the main ways to remove someone from a mortgage without refinancing? Now, there are 5 main approaches lenders or courts might allow, and these include a mortgage assumption, court-ordered removal, loan modification or lender release, bankruptcy, and a quitclaim deed. Each works a little differently, so some focus on who's legally responsible for repaying the loan, while others only change who owns the home on paper. It's really important to understand that changing ownership and changing debt responsibility are 2 totally different things. And that's where a lot of people get confused. Question 3, what exactly is a mortgage assumption? Now, a mortgage assumption means one person takes over the existing loan, the same interest rate, the same monthly payment, same balance, without creating a new mortgage. This option can make a lot of sense when the loan is an FHA, VA, or USDA mortgage, because those are often assumable. Conventional loans, on the other hand, usually don't allow it. Now, let's say, for example, Jamie and Alex bought a house together a few years ago with a low FHA rate around 3.5%. After their breakup, Jamie decided to stay in the home while Alex wanted out. Refinancing now would mean losing that great 3.5% rate and taking on a new loan closer to 7%. Instead, Jamie applied for a mortgage assumption. The lender reviewed her income, debt ratio, and credit score to make sure she could afford the loan on her own. Once approved, Alex was officially released from the liability and Jamie kept the same great interest rate, saving thousands in potential refinance costs. Now that's the ideal outcome, but it's important to note that not every loan qualifies and not every lender will approve an assumption. If your loan isn't assumable or your income doesn't meet their standards, you may have to explore other routes. Question 4, what about a court-ordered removal? How does that work? So a court-ordered removal usually happens during a divorce or legal separation. A judge can issue a decree assigning mortgage responsibility to one party, meaning one person is officially responsible for making the payments. However, the lender doesn't automatically remove the other person's name from the mortgage just because a judge says so. For example, Taylor and Morgan went through a divorce where the court awarded the home to Taylor. The judge's order said Morgan no longer had to pay the mortgage. But because both names were still on the loan, the lender could still report any missed payments under both credit files. Morgan didn't live there anymore, but their credit was still on the line. This happens more often than people realize. And it's why it's so important to get the lender's official release in addition to the court order. Question 5. What is a loan modification or a lender release, and how does it help? So a loan modification is when your lender agrees to change the terms of your existing loan. Occasionally, lenders may agree to remove one person's name through this process if the remaining borrower fully qualifies to carry the loan alone. A lender release works similarly. It's when the lender formally agrees to release one borrower from liability, even though the loan stays the same. The challenge is that these situations are rare. Most lenders like having multiple borrowers because it reduces their risk. But if your lender is willing to consider it and your finances are strong, a modification or release can save you the cost of refinancing while giving you the clean break you need. Question 6. How does bankruptcy affect the mortgage situation? Bankruptcy can discharge someone's personal responsibility for the mortgage debt, but it doesn't automatically take their name off the loan or title. So for example, if one spouse files for Chapter 7, they might no longer be personally liable for the mortgage payments, meaning the lender can't come after them directly, but their name still stays on the mortgage record. That means the loan still shows up on their credit report, and if payments stop, their credit could still be affected. Bankruptcy can offer financial relief, but it doesn't erase ownership or remove someone from the loan automatically. Question 7. What about using a quitclaim deed? Does that remove someone from the mortgage? This one's a big misconception. A quitclaim deed only affects the home's title, not the mortgage itself. So if you sign a quitclaim deed, you're giving up ownership rights, but your financial responsibility stays the same. Let's say Chris and Dana owned a home together and Chris decided to move out. Dana asked Chris to sign a quitclaim deed so she could take full ownership, and Chris agreed, but his name stayed on the mortgage. A year later, Dana fell behind on payments, and the missed payments still showed up on Chris's credit report. It's a common mistake. To truly remove someone from both ownership and liability, you need a coordinated approach, like pairing a quitclaim deed with a mortgage assumption or refinance. Question 8. What kinds of costs should people expect when removing someone from a mortgage? Even if you don't refinance, there can still be fees involved. A refinance often comes with thousands of dollars in costs. Lender fees, appraisals, title insurance, and so on. Without refinancing, the expenses are usually smaller but still worth budgeting for. A mortgage assumption, for example, might cost about 1% of your loan amount in fees, plus a few $100s in administrative costs. If you're transferring title through a quitclaim deed, you'll likely pay recording or filing fees, and a court order might require attorney fees. While these are much less than a full refinance, there's still something to plan for, especially if your situation involves legal paperwork or professional assistance. Question 9. What should someone do before trying to remove an ex or co-borrower from the mortgage? The first step is always to talk to your lender. Ask if your loan is assumable, whether they allow releases, and what financial documentation you'll need. If you're dealing with a divorce, it's also smart to work with a family law attorney to make sure any property changes are reflected in your legal agreements. You should also double check your credit and income to make sure you can qualify for the loan independently. And don't rush the process. These decisions affect your credit, your ownership rights, and sometimes even your long-term financial stability. So to wrap it up, removing someone from a mortgage isn't simple, and refinancing is often the cleanest route, but there are alternatives. Mortgage assumptions, court orders, and lender releases can all work under the right circumstances. The most important thing is to keep communication open between you, your lender, and your legal team so no one's credit or ownership is left in the gray area. If you found this video helpful, go ahead and hit the like and subscribe for more mortgage tips, and drop a comment if you have any further questions. Don't forget to check out the full article on the mortgage reports, which is linked in the description. Thanks for watching. See you next time.